Yeah, just a brief explanation of a pattern in the stock market that is coming up right now as we speak in the Dow Jones and I believe the Nasdaq and the S&P have it too. It's called a Head and Shoulders, where you have an initial move after a long run higher. You have a move that reverses, and then it goes a little higher than that last reversal. It comes back down to what's called the neckline at the bottom here. It's a floor basically, and then to finish off the pattern, it comes up and makes a right shoulder, and it's called a head and shoulders basically because it kind of looks like head and shoulders. So you got your left shoulder, your head, which comes up higher than your shoulders, and then a right shoulder. So how you play this pattern is you've got your neckline here, drawing a line at the neckline. Usually it's straight, but it doesn't have to be perfectly straight. I'm kind of drawing what is the textbook head and shoulders right now. So you take the distance between the top of the head to the neckline. You extend that below the neckline. So the measured move for this would be approximately where I drew this bottom line here. So upon breaking the neckline, that's your trigger to go short in the market, or if you're basically just investing, go to cash. And typically it'll have a move down to the measured move. It may just break the neckline, come back and retest the neckline as resistance. That's another opportunity to short it, but it doesn't have to do that. Okay, so that's the basic pattern that's showing up, and now let's look at it on the chart. Here's the Nasdaq, and what's going on is there's your basic neckline. This one is a little slanted. There's your left shoulder, your head, and now we just had a failed pattern, which is the descending triangle here. It broke the downtrend, so this descending triangle is failed. So now it's likely to go higher, and soon we'll have our right shoulder. The S&P 500 is the same way. The Dow Jones is the same way. Now on the Dow, if we take the measure move, all I'm doing is drawing a vertical line from the head to the neckline, extending it down, and then I'm going to throw a horizontal line across where it lines up. Now it does line up with a support area. Previous resistance is now support, right? There's also another intermediate term support area down at the just about 8100. So this measure moves brings us down below 9,000. And you think that's pretty bad? This is not the worst case scenario. This is not the situation that I am worried about. What I am worried about is the longer term situation where we have this head and shoulders, which has already formed. So we've got a left shoulder, a head, and we're already up at the right shoulder now. So we could stay in a range like this, like the left shoulder did for a while, but if this breaks down, where does the measure move of this take us? All the way down to just about 4,000 on the Dow Jones. Now there is a couple of support levels. Here's a support level just below 6,000, and then here's a support level near 4,500. The main support level that I'm looking at here is the 4,000 mark, pretty much exactly, and that's basically where the measure move is taking us down to this 4,000 level. Now I'm not saying that these other support levels won't hold up. This one's kind of weak, so I'm going to get rid of it. But the measure move brings us down to approximately 4,000 on the Dow Jones. It hasn't confirmed itself as a head and shoulders yet, but if we do get some downward momentum on this, it's definitely probably going to end up double dipping. So we're watching this shorter term head and shoulders. If the shorter term head and shoulders plays out, we break the neckline and we come down. It's probably, in my opinion, going to be enough momentum to get down to a double dip. Whether we'll break the neckline on the double dip, who knows? That's in the future. But this is what pretty much every technician that is in the market, this is what we're watching. This is bigger head and shoulders, and we're watching these other intermediate term head and shoulders on the Dow, the Compaq, and the S&P 500. Now, longer term on the S&P 500, we've got a different pattern. It's still bearish. We've got a double top, so you see one top, two tops, and this is actually up the 50% retracement of this range. So it held 50% retracement, and that's pretty bearish in itself. So we've got a few bearish patterns on the market right now, and we need to watch those patterns to get a good indication of where this market is going to go. Now, I'm not saying the Dow is going to end up going down to 4,000. I think there's a good chance that it might. But this is what we are watching.